At first glance, it seems that a bank is a great place to store your hard-earned money. However, hardly anyone can think that secrets are hidden behind the walls of this financial institution, which many do not even suspect. That's just billionaire Henry Ford argued. It's good that many people don't even know how the banking system works, because it would lead to a revolution. Today in this video, we will reveal to you banking secrets that only rich people know about. How banks earn money from you, and what is better to do with money so that it does not fall into the pockets of greedy bankers. Therefore, take a notebook and a pen in your hands and watch this video to the end. Friends, before we start, please subscribe to the channel and like it. One of the reasons for the strong wealth stratification of the world's population is poorly developed financial literacy education. In today's world, it is impossible to achieve financial wealth and prosperity without knowing how to handle money, and banks successfully use it. Now we will tell you a few banking subtleties, knowing which you will be able to manage your money more competently and will not fall for bank tricks, increasing your financial literacy. Banks use your money. Since ancient times, banks have often advertised deposits as one of the most reliable tools for passive earning and saving money. The whole problem is that in fact such an income is not effective and not at all as profitable as the banks promise us. The fact is that the interest rate of the deposit is so small that it will not cover the ever-increasing rate of inflation. According to statistics for 2023, for example, the top US banks offer an interest rate on the deposit in dollars of 4.2%, while the inflation rate for the average year is 4.7%. So it should be concluded that your income from the deposit will be completely eaten up by inflation. It is also worth noting that this is the inflation rate according to official government data, although in fact this inflation rate is much higher. This situation is common not only in the USA, but also in other countries of Europe and the world. Currency fluctuations are also a problem. At the moment, none of the top banks in the world will offer an interest rate that will be higher than inflation, since it is simply not profitable for banks. It is only advantageous for banks to keep customers' money in their accounts at a low interest rate, while the same money is given to other customers in the form of a loan at a higher interest rate, earning on the difference between these two percentages. The state is also interested in such manipulations with your money. Banks force money to circulate, which means that not only the owner has access to the deposit. The government also have some level of control over citizens' money. That is why super-rich people are looking for ways to protect their wealth by storing their money in offshore territories or in those countries where money is less susceptible to the influence of the authorities. But do not think that now your finances cannot be reliably saved and multiplied, because people have long found an alternative to bank deposits on the internet. This is a cryptocurrency. Digital assets significantly benefit from this. The main advantage of Bitcoin is that no bank can withdraw it from the owner. In case of emergency, the cryptocurrency can be sold, withdrawn from the account, and so on. In the case of a bank deposit, this situation is reversed. The depositor puts money in the bank at an interest rate for a certain period of time and cannot withdraw it and use it at his discretion. But even if he withdraws, the accumulated interest burns out. Friends, write in the comments, do you keep money on deposits or do you prefer alternative storage options? The main customers of a bank are the banks themselves. It sounds paradoxical, but banks exist to serve themselves. Serving other customers is a secondary process. All the money that comes into the bank becomes its asset, and all the money borrowed from the bank is also its asset. That is, the banking system is organized in such a way that the bank is almost in a win-win situation in both cases. This makes it always act in its own interests. The point is that once you enter the bank, your money ceases to be only your property. It also becomes an asset of the bank that it manages. The credit limit in a bank always depends on how many deposits are kept in it, and this ratio is always not fair. Banks give money to those who don't need it. Bankers are usually the most impeccably dressed specialists in the world, and they consciously or unconsciously evaluate the appearance of others. In some cases, this is a key moment in the bank's decision to issue a loan. If the client is dressed untidily or looks bad, the bank will not want to give him a loan, classifying him as an insolvent category of citizens. That is, in simple words, if the borrower looks like he needs money, then he probably won't get it. However, if he looks like he doesn't need them at all, then he will most likely get what he wants. It is worth noting that the only exception to this rule is the availability of money in bank accounts. In this case, the bank's employees, after checking the client's accounts, can find out whether he's really wealthy. If there is no account, then they will evaluate it by appearance and will quickly draw conclusions based on it. Therefore, the next time you go to get a loan, then take care of how you look. To some extent, this can play a key role in the bank's decision if there is no proper amount on your accounts. Bankers receive annual bonuses for loans issued. Of course, annual bonuses do not go to all employees, but only to those who are directly involved in the process of granting loans, and usually these are managers. Every employee of the bank at the end of the year wants to get a nice extra payment on top of their salary, so closer to this time, they are more willing to approve applications. This often happens unconsciously. At the beginning of the year, the manager does not feel pressure from his superiors to approve loans, and there is no question about the urgency of fulfillment of the established plan. But closer to the end of the year, there is a fear of losing the bonus by not approving a sufficient number of applications and thus not fulfilling the plan set by the management. Besides, no one wants to be on the list of incompetent employees. Thus, if the client doesn't get the loan, the bank employee may miss out on the annual bonus. So next time, if you are planning a major purchase and you need credit facilities, and you are doubtful about approval, if possible you can postpone the matter to the end of the year, thereby increasing the probability of approval. Banks make money off you and your name. The customer database is another valuable resource that many unscrupulous banks willingly work with. It is not uncommon for banks to secretly sell their customer database to other financial organizations, such as organizations engaged in microcredits or fraudsters. It all depends on how conscientious the bank employees are. It is impossible to be completely safe, as you will never know who sold your data to whom. But before you decide to open an account in a little-known bank, you should think about the consequences. Friends, of course the information told today does not urge you to completely abandon cooperation with banks. It's just worth thinking about some of the nuances of managing your money and their consequences. For example, instead of a regular bank deposit, it is better to learn how to invest money correctly, or invest it in a business, and instead of using a loan, it will be more profitable to pay in cash so as not to lose an extra dollar. Because, as you know, a dollar saved is a dollar earned. If this video was useful for you, then put a like and share this video with your friends.